We have Mr. Pankaj Jain, Member Secretary for the 8th Central Pay Commission, Government of India, and formerly Secretary of MOPNG. And we have Frederick, from President of Reservoir Performance in SLB, formerly Schlumberger, based out from Paris. So this debate is about transition technology. So let's start with the big picture. If we look at the global narrative around global energy transition in the last few years, a lot of the narrative has shifted quite dramatically. We see technology cost curves which are not in the money. We see investor expectation more on returns. And we see, of course, supply chain disruptions and geopolitics on top of that. So if we take a big picture perspective, and maybe we start from India perspective, Pankajji, and maybe you can share with where have we accelerated progress in the last few years? What has remained the same? And where is it you see continued challenge as we look at energy transition?
Okay, thank you, Ashish, and absolutely delighted to be here. So, look, it's an interesting question to begin this discussion. The thing is this: if I look at it from an India perspective, and more, when I look around the world, there was a certain moral argument which underpinned transition. That yes, this is something which we owe to our future, we owe to the next generation. We need to get a grip on carbon and emissions and so on, and move to technologies which are less damaging. And it's not just geopolitics which has made a difference. The economics keeps coming back to haunt us. And technology hasn't really moved at the pace where one can say that yes, the technology has brought down cost. So technology has made some things possible, but technology has so far not made it possible at scale where it's economical for people to do so. Where has it worked? If I look at an India perspective, we always thought around the world again that gas would be a bridge fuel. As we moved on this journey in transitions whereby it's not disruptive. Where gas has worked particularly is in the vehicle space. Now, if you see in our large metros, for instance, almost 1 out of 4 new vehicle registrations are on vehicles which run on gas. The entire tertiary cargo movement within big cities has moved to compressed natural gas. We have seen practical improvements happen in vehicle technology in terms of efficiency in use. That we have seen happen from the car manufacturers. And we have also seen efficiencies built in on the supply side in terms of new models coming in and the way the network has expanded. All that has happened. So that's one element where it's worked well. If I see on the biofuel side, the adoption of technology has been very rapid on 1G and on biomethane, what we call biogas in India. So there we have seen a lot of experimentation around new technologies. But again, it's been more around process improvements and process control. That has improved rather than a big leap in terms of technology itself coming in. But where, again, in 2G, there's been some traction. Pricing for 2G continues to hold back improvements in technology. There's not enough money on the table to justify it. There's investment which has been happening from state-owned enterprises in second-generation biofuels. But again, something which has worked well is the way flex fuel and flex fuel hybrids have come in now in terms of vehicles, and not just prototypes, but actual vehicles getting rolled out is what we are seeing much more happening in India. And finally, some early green shoots which we see on green chemicals, green petchem, some early investor interest which we have seen, that seems to be doing well. What is stuck? EV charging is still stuck. EV charging is still not at a level where I get confident that if I'm buying an EV, I will be able to get charging facilities on a long run, on a long drive. CCS, we still haven't cracked it. And no, even our early pilots haven't been doing great. SAF, a lot of interest, but again, not enough happening on the ground, but I think that will change more rapidly. What is exciting? Like I said, green chemicals, green petchem, a new thing which we are working right now, which you're seeing happening, seaweed to crude. That is something which is looking quite interesting. 3G ethanol, hopefully we'll get it right. And some of the things which we are now hoping to see on SAF. So those are things which excite us.
So quite a spectrum is what you painted, Kajal, from India perspective. Frederick, from global perspective, how do you see the debate? What are you excited about? What remains challenged?
So look, first I would step back maybe a few years and go through the narrative of the energy transition, right? If you step back 6-7 years, a number of scenarios were depicted out there, and the majority of them were forecasting a transition that should take 20 to 30 years, and everybody would be happy reaching net zero by 2050, and from there you build your models and you build phase out of fossil fuels, scale up of renewables, hydros, sustainable aviation fuels, hydrogen, you name it, right? So these scenarios were in place and in many ways were the foundation for many of the investment decisions, or at least many of the strategies that governments and companies put in place. Now you move and a lot of the stimulus recovery plans on the back of the COVID were built on these green investments and these green energy policies. Now you step back 2, 3, 6 years today post-COVID, and what you realize is a lot of the scenarios have changed, i.e. people have revised their outlook in terms of how the energy mix will look like. I think the realization that fossil fuel will remain an important part of the primary energy mix for decades to come has now landed. I think the other realization that's important is we have to realize that the energy demand is growing beyond what the energy systems were designed for in the first place. And when it comes to access to energy, we all want to do the right thing for the planet, but first of all, many people need access to energy beyond getting access to clean energy in the first place, right? So we have to accept that these challenges depend or vary greatly from one place to another. What's true in India will be very different versus what's true, for instance, in Europe or in other places in the world. And energy supply strategy, energy security strategy are regional, need to be pragmatic, need to be anchored in reality, need to be grounded. So that's, in a sense, the context. Now, I fully agree with what Pankaj mentioned in terms of what has worked and what has not worked. I think there's the harsh reality that many of us have realized is that a lot of the green energies, for lack of better words, heavily rely on policies, incentives, but that means someone has to pay for it. And when you look at the variation of the evolution of the cost of capital in the last 5 to 6 years, it's been quite drastic. Whether you go to Europe, whether you go to China, whether you go to the US, for instance, you look at tremendous variations in cost of capital. A lot of the investments required behind this energy transition are extremely capital intensive, meaning you have to deploy a lot of capital and your returns will be in the form of, let's say, a rent over very long term. Today, public capital has to unlock private capital in so many ways associated with those. It's true in renewables, it's true in CCS, it's true in hydrogen, it's true in sustainable aviation fuels. You will not unlock private capital unless public policies and, in a sense, incentive are allowing companies to take FIDs on those projects. And when you look at what drives C-level, board-level decisions in private companies, a business case has to be there, project finances has to be there, the bankability of projects has to be there. And in many environments, and in a sense, India has unique opportunities there, but there are many places around the world today where projects are not bankable on their own, without massive government subsidies, projects are not bankable. And that's a reality that has landed in a very cold way, in my opinion, and which is why we've seen across the green energy space a lot of companies going bankrupt simply because projects were not bankable.
So I think it's quite a quite a different in the average view. So we're talking about transitions. Of course, we can't stay away from geopolitics. So maybe we dive into that a bit. So if you look at geopolitics, tariffs, consequent implications on supply chain disruptions, and of course, you overlaid on top of that capital constraints and capital becoming more expensive. I think that puts a lot of constraints on the cost competitiveness of many of these technologies. So if we take a company lens, and maybe I'll start with you, Frederick, to begin with, how are companies now changing their focus or finding different ways to prioritize in terms of where they should focus their investments on and capital allocation, despite all of these uncertainties? So what is changing in terms of the company focus and prioritization?
Yeah, that's a good question. So not to get too deep into geopolitics, what I would say is for us in SLB specifically, I'll speak on behalf of SLB. I mean, geopolitics have always been an heavy part of what we have to look at as a company because, you know, we've been supporting the oil and gas sector for 100 years. And obviously the oil and gas sector has always been subject to geopolitical risk in some shape or form, right? And for instance, when we look at 2025, when we started looking at the 2025 plans and the risk associated with the business, geopolitics was the number one by far, because half of the world was going into elections of some shape or form, not to account for some of the changes in administration that took place, that obviously had huge momentum behind some of the policy shift that we have seen, right? So for us, if you want, we look at geopolitics very closely. You mentioned tariff in your introduction statement. That's something that obviously as an organization, we have to take as part of a key attributes of running our business, which means that we're trying to hedge our risk on a global basis. We're trying to hedge our risk across policy spectrums. And from a logistics and from a capital allocation standpoint as well, we're trying to hedge our risk. So today it's fair to say that despite being a global company, we're having a very regional approach to capital investment decisions. We're having, I would call it a technology approach to capital investment decision. And as well, we're trying to make sure that we balance our exposures with respect to potential geopolitical shift. So we will not put all our eggs in one basket, to make it simple. And when it comes to our investment portfolio, we always have an aspect of time risk, geopolitical risk, technology risk, policy risk. And all in all, I mean, we hedge those across a wide variety of investment opportunities, and we book upsides and liabilities accordingly on our prospects, right?
Pankaj, how do you see that from companies? What they should do to retain their focus and prioritization with this uncertainty?
So look, I think what Frederick said is absolutely spot on in terms of the different risks which companies today face. The question which any company any board would always struggle with is, to what extent can this risk be mitigated or hedged? And there, increasingly, I mean, definitely for transition technologies, but surprisingly even on fossil fuels, we are seeing that state support is probably playing an outsized role in terms of decision making, in changing the decision-making matrix in companies. The answer to anything happening geopolitically, anything happening to tariff, typically companies tend to look at national governments. That look, this has happened, either you have to change it, if you can't change it, please compensate me, please make me whole. So again and again, in terms of the money which the state can bring to the table in terms of incentives, in terms of a policy support, or at times in terms of the legal framework, the policy framework which they put in place, that is going to matter so much more in terms of decisions which companies take. And at one point of time, this used to happen in countries which had a history of state intervention. We are increasingly seeing it happen in countries which typically we would not have expected the state to come and support these kind of things. So at this point, that seems to have become the default response.
Very interesting. I think a lot more localized context, understanding that and making it work. Maybe, Pankaj, I'll just bring back to you again on, in the opening statement, you mentioned about areas where we have made a lot of progress, right? Transition is moves in different place. So from an India standpoint, what is it that technologies where India is starting to leapfrog and innovate in ways, and what is it some of the areas that you think the world can also learn from where India has made progress in the last few years?
So look, it may sound a little disappointing, but most of the cutting edge work is still, we're still looking abroad. In terms of practical usage, that is where we seem to be better. In terms of, you give me a technology, how I tweak it, how I indigenize it, how I cut down costs, strip out every dollar out of extra costs. That is where we seem to be better in terms of deploying them and, establishing that yes, this can work. Ripping out the niggles and so on. On all that, we have been much, much better. But if I were to, put a hand on heart and say that, look, this is absolutely top of the line, this is the best technology, has come from here, I'll probably struggle to name a few.
Okay, ways to go for us to still make progress on that.
So the thing is, who's going to do this work in India? So there is a vacuum there. Because if I'm going to expect state-owned enterprises, if I'm going to expect the private sector to do it, I don't think we've got the ecosystem for that.
Very interesting. Frederick, from a global perspective, from a energy transition technology perspective, what are you particularly excited about? What is it that you are serving many of the clients?
So look, then I would step back to what we do as SLB, what a majority of the company does, which is to be an energy service company and supporting E&P operators, exploration production operators, with respect to oil and gas production, right? There's obviously deploying technology is what we do and what we've been doing for 100 years. There's many things that I could pick on, but if I was to pick a few in line with what our customers' value drivers are, one, we accelerate time to first hydrocarbon. That's a key value driver for our customers, and we're doing that in a number of ways. We help them acquire and process seismic data a lot faster. Some of the high-power compute technologies enable to illuminate zones to a level of resolution and accuracy that was not happening before. We're able to link seismic insights, mappings, to early exploration prospects. So in a sense, you accelerate workflows. We're able to accelerate the time from exploration, from discovery to first hydrocarbon. So this creates value to customers, and a lot of it is leveraging artificial intelligence nowadays. The industry is fortunate enough to have access to a lot of data, so artificial intelligence is surely disrupting the industry. I think electrification is another key opportunity for the industry, both in terms of creating value, in terms of accelerating production, in terms of enhancing production, but as well at a lower carbon footprint. And if I was to pick one main opportunity that I see for the industry at large, it would be agentic AI. We do see transformative potential from agentic AI when it comes to observing, planning, generating, because obviously agentic AI leverage generative AI, acting and learning. And what we see is that for technology companies like ours and like many in the sector, a lot of these solutions will rely on domain-based knowledge, meaning, yes, you need to know data science, you need to be able to process that amount of data, but you need a lot of domain knowledge. So meaning that these solutions will be designed by the industry for the industry. So for us as a technology company, This is something we're investing a great deal of the R&D and engineering efforts about. And we believe that this is going to unlock a lot of value for customers. We already have a lot of use cases, and we think that that's going to scale pretty drastically.
Exciting. So we come back to role of regulation. I think you touched upon in some of the comments before. And role of regulation, I think, couldn't be more important at this particular moment in terms of playing a catalyzing role in terms of unlocking many of the transition technologies, whether it's CCS, whether it's networks, whether it's storage across the value chain. Maybe if I come to you, Pankaj, on how can companies best collaborate, I think, with the regulators, with ministries, and with state agencies in order to shape policy? What works, what doesn't work? What have we seen?
So look, on regulation, there are two streams. There is one in which companies can engage. There's another one in which companies will find it more difficult to engage. The ones where companies will find it more difficult to engage is something coming out of court judgments. So let us say, particularly in India, we've seen this. You can go to court and argue that around the world companies are conspiring to make sure that citizens don't get clean air, and therefore you get a court order mandating that you move out of diesel, or you move all buses to be on gas, or all buses to be EV. You could potentially get such an order. There's a history behind this. It has happened in the past. Now, I don't see companies being able to influence that process too much, because that's an autonomous process. It's going to happen. Where companies will have a role, or where companies will be heard, will be much more on the government side and on the regulatory side. That yes, a regulator comes up with certain ideas, or a company comes up with certain, or a country comes up with certain ideas in terms of what can be done. Now, where companies have a role and where industry bodies really have a role, because what we have seen is industry bodies on this often fail, because they end up being more of bodies which will talk about tax concessions and less about giving genuinely good things. That look, here's a good idea. We are also willing to put in a couple of pennies on this. We think government, if government does it, so that's an area where I think some more strengthening is needed in terms of being able to influence the dialogue. But the second is to be able to bring in more and more international experience, international case studies to government's attention in a manner which is not just about, okay, here's a set of papers, please read them, but to actually demystify it and say that, look, we think this can be done. We are happy to go along with you and do something ourselves, but we are also happy to handhold anybody in government who's interested. So there is space for that. It's a space which is currently less occupied.
Okay. Frederick, how do you see that from collaborating, I think, with regulators from a company perspective, I think, in order to shape policy from the other side?
So look, so first of all, as a company in general, we have an anti-lobbying policy, which means we don't actively lobby. On the other hand, we do provide, I would call it unbiased feedback to regulators, eventually to governments, in terms of what we believe can help capital allocation behind some of those initiatives, and eventually what can be the hurdles or the no-goes and the red lines that actually prevent those. So we're actively providing feedback, either directly or via industry bodies. When it comes to some of the topics we've discussed earlier on this panel, I mean, we've volunteered quite a bit of feedback, whether it's in India or in other jurisdictions, around the need for policy and incentives to actually be aligned, which has often been a challenge, especially behind hydrogen, behind carbon capture and sequestration. So we've provided quite a bit of feedback, and in general, what it comes down to, how do you unlock capital deployment? The biggest challenge behind the pace of progress behind these initiatives is actually the allocation of capital, and we're regularly volunteering feedback to the regulating bodies and their affiliates, right? Now, to say that one size fits all, absolutely not. For instance, if you look at a region like Europe, I think policies frameworks are in place. The fact that there is a trade-in cap mechanism or an emissions trading systems in place greatly facilitates that discussion, because ultimately public and private corporations can build a business case around the decarbonization of their operations, the decarbonizations of their activities, and put a dollar value on carbon. Beyond Europe, it's becoming obviously a lot more tricky, right? Mm-hmm. I mean, we have China where that's taking place as well, but these are more exceptions rather than the norm today. Yeah.
Okay. I think we touched upon AI very briefly, so I think it's good to probe a bit more on that. And maybe Frederick, I'll start with you around the potential. I think probably most organizations see, but there is a challenge, significant challenge still in adoption, scaling, and making transformative changes. So what are some of the challenges that you see in terms of which is really constraining AI adoption from a transformation perspective?
From a transmission perspective?
From a transformation, organization and transformation perspective.
So look, I mean, I think today when it comes to AI, I mean, we're obviously seeing a lot of potential, and we're seeing that through use cases, be it in terms of acceleration of first oil, be it in terms of production enhancement, production management, be it in terms of late life extension for some of the producing fields. And there are technologies that are leveraging AI models to support that. But to say that we've seen the full potential, definitely not. There's massive investments taking place in terms of digital infrastructure behind those. I think there's still question marks over the returns on these investments. I think that's something that the energy sector and other sectors have not proven yet. Obviously, the investments are taking place, which means there are smart people that are behind this and are convinced that the value and the returns over time will be there. But so far, I mean, it's too early to tell. So I think this is one looming risk: aren't we doubling down too fast on investments when the value may not be as high and as transformative as we hope? But I think from an early adoption of what we've seen, and for us, I mean, across what we do in the oil and gas sector, I mean, we have seen a significant uptake in the value creation associated with our digital solutions. So whether they are generative AI based, agentic AI based, we do see a very significant uptake.
Okay, maybe a last question to each of you, and maybe I'd like to indulge in some crystal balling for the next few years. So let's say we fast forward 2030, we're sitting in India Energy Week 2030. What is it that you would like to see, or what would the narrative be, Pankaj, and what you wish, and what do you think it would be, maybe if I project a few years out?
Look, 2030 is not too far out.
Yep.
So, and therefore, I think fossil fuels are going to be around and will continue to matter for us in 2030, because in terms of ease of use, in terms of the stock of equipment, vehicles, what have you, the infrastructure which is already there, I think for it to be easily replaced, I don't see that happening by 2030. So that is one, and therefore probably our discussion would still tend to focus much more around squeezing more out of fossil fuels in terms of how do I get better efficiency, but also how do I get them faster to market, how do I crash production timelines, and how do I get data which I already have to work better, particularly seismic data. All those things will continue to play. But if we are looking at something, and I don't know, I'm not a soothsayer on this, if crude is going to be $130 in 2030, then I'm sure that transition suddenly starts making much more sense, rather than beating ourselves up saying we're bound to use crude, because all said and done, there is a journey which transition has already done, and there is a certain comfort level which has developed. May not be ideal, but there is something. So a toggle can actually operate pretty fast in 2030 if the pricing goes out of whack.
Okay, so Frederick, what is your wish list? 2030?
So
What do
I
you wish?
agree with everything that Pankaj said. So I'll go on another topic. Maybe by 2030, I would like to hope that the energy industry at large is a sector that's attractive for the younger generations. You know, I think there's been a lot of negative publicity at large, especially behind oil and gas. And I think that's somewhat hampered progress across the industry. So hopefully by 2030, we can have the industry being as attractive as it can be for all generations.
Excellent. We're right on time. Thank you very much to Pankaj and to Frederic. So, big round of applause to both of them.